Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I bring you founders, entrepreneurs, executives, thought leaders, artists, you name it, all over the world, crypto and blockchain globally. And I have another amazing guest. All my guests are amazing, but I have an amazing guest this morning. He is the head of business development at ICONOMI. His name is Anthony Fernandez. Anthony, welcome to the show.
Jamil, thank you very much for having me, and thanks for a very kind welcome onto the show as well.
You're very welcome. So ready to kick things off? I am.
Let's
Uh,
go. Hopefully I can provide some value to your listeners.
awesome. So let me ask you the first question is about your background. What is your background, and is it a logical background for what you're doing now?
Yeah, okay, great first question. So, long story short, I've worked in the financial markets now for 8 years. Started my career in traditional wealth management, fund management, moved across into the FX market. And for the past 6 years, I've worked directly in the cryptocurrency market. My first role in the cryptocurrency market was actually working for a startup company in Australia, which was a Bitcoin mining company. We essentially grew that to a global presence across the EU, America, obviously Australia. We had a facility in China before they banned Bitcoin mining. Fast forward to today, over the past year and a half, I've been working at ICONOMI, which is a digital asset portfolio management platform here in the UK. So we essentially have a range of, index, quant, discretionary managed portfolios for investors to access if they don't have the skill set and knowledge or know-how to actually invest and manage their own portfolio in the cryptocurrency space.
Got it. So, yeah, next question is ICONOMI. What's it all about? How does it work? Why should we view you guys as an authority in this industry?
Yeah, that's I guess when you're looking across the cryptocurrency market, it's hard to find, sometimes it's hard to find who the good players and the bad players are. Now, Economy's been around in the space since 2016, was one of the top 10 ICOs in the world at the time. And since then we now have more than 120 million pounds invested across our portfolios. We have a large audience across the UK and Europe as well. And our portfolios, when you actually take a look at their performance, not only do they have risk management attached to them, so limited drawdown potential, but they've also consistently outperformed Bitcoin over a long period of time, so over the past 5 to 6 years. So Bitcoin is our measure in terms of outperformance, and a range of our portfolios have consistently outperformed Bitcoin over the past number of years.
That's impressive. Some things are outperforming Bitcoin right now. They're called meme coins, but other than that, and we're going to talk about that because we're talking about retail investors, right? Your normal retail investor can't afford to buy a full Bitcoin, right? But they can make informed crypto, non-emotional investments. How can they do that?
Yeah, I'll just touch on one thing you said. So, outperforming Bitcoin, it's not necessarily just picking tokens that are going to outperform Bitcoin. It's also limiting downside potential. So knowing when to potentially trim down exposure and then when to increase exposure as well. So, not necessarily just holding and sitting and holding forever, but sometimes the portfolios, because they can be discretionarily managed, a lot of the portfolio managers are reducing exposure during times of downside pressure and then increasing on the upside. And yeah, I guess coming back to your question, so how can retail investors make informed crypto non-emotional investments? I think firstly it comes down to your personal goals and ambitions. Every investor is different. So how much risk are you willing to take? Can you stomach drawdown? Do you have a 10-year investment horizon or a 1-year investment horizon? So building a strategy and sticking to that strategy will help you remove the emotions from investing. So you really want to kind of automate this and remove the emotions from investing in the cryptocurrency space, which can be very hard because it is obviously highly volatile. Now, in terms of what does informed mean, it doesn't necessarily mean reading the mainstream news. These kind of news events are just short-term volatility events. They very rarely establish a long-term trend in the market. So, for a retail investor, it's quite hard sometimes to switch off from the mainstream news and seeing these major headlines that Bitcoin's going to 1 million or, Dogecoin's going to 1 million. So try and switch off from those mainstream news events. And to become informed, you want to start looking at high quality data and information. So looking at institutional inflows and outflows into particular projects, understanding Bitcoin's 4 year cycle, understanding Bitcoin's spiral chart, which takes a look at the halving event and the different bull markets and bear markets. So, and looking at on-chain data as well. So remove the junk noise and the junk news and look for more high quality data to make investment decisions.
And where can people obtain that data?
Tough one. There's so many data providers, that you can look at out there, high quality ones as well. So for myself, if I'm looking at the total value locked, I'm going to websites like DeFi Llama. So that indicates the total value of assets that are being locked in different staking protocols. So, for example, this will indicate the confidence in a certain project. If more investors are staking and locking their assets up for a period of time, it indicates more of a positive sentiment around that particular project, which indicates possibly a good time to start looking at investing in that project as well. And vice versa, if the TVL is dropping, it indicates investors are trimming down their exposure. They don't want to be invested for a period of time. So that indicates probably a reducing positive sentiment in that particular token. So that's, TVL, but then you can also look at, Glassnode, Into the Block, CoinGecko. These types of platforms provide valuable on-chain data to make investment decisions. And for looking at, inflows and outflows at the institutional level, I personally go to a company called CoinShares. If we take a look at 23, was looking at the inflows and outflows into different projects. Solana was the second highest project to receive institutional inflows behind Bitcoin. So for me, that was I was actually investing into Solana fairly heavily, and in 23, it did over 1,000% return on investment, being driven by those institutional inflows. So just understanding liquidity going into and out of different projects really help you direct your capital as well in the market.
Okay, that's from an institutional perspective, right? That's being informed as far as data, but there's also something else going on right now, and that's being informed regarding, I guess, what's the word? Narrative, or
Yeah.
which is nothing to do with fundamentals.
Yeah, themes, there's a lot of themes that do take, but obviously the Bitcoin ETF was a major theme over the past year. And, for me personally, I'm now taking a look at the Ethereum ETF theme and narrative. So earlier this year, I know we're having a bit of downside pressure over the past week or so, which we can touch on later as to why that's happening. A major narrative now is investors at the institutional level are trying to front run the Ethereum ETF narrative. So liquidity is actually flowing into Ethereum on the assumption that an Ethereum ETF may be approved over the next few months. Whether or not it gets approved or rejected or pushed back is irrelevant because these investors are actually just trading that particular narrative at the moment.
Got it. Yeah. So, trying to front run, I see that. You but you are a proponent of developing a well curated selection of assets that hedge against volatility, and not just say Bitcoin's a hedge against volatility, but having like a portfolio, right? And you talk about strategy, right? What does having a well balanced strategy mean? What is that?
Yeah, this is a tough one. I think personally, it's impossible to have solely a cryptocurrency portfolio that's well balanced. You need to have other assets in there as well, whether it's gold, equities, bonds, because looking at crypto and Bitcoin and what they actually are, they're probably a mixture between gold, fiat currency, and also tech stocks, which thrive in a low interest rate environment. Now, in terms of diversifying your digital asset portfolio, for me, Bitcoin is the leader. I come from the Bitcoin mining industry, but I also understand that there's opportunity for return on investment outside of Bitcoin. So for me, I have a large allocation in my portfolio to Bitcoin. And what I will then want to do is diversify via the different segments in the cryptocurrency market. So, for example, allocating into the DeFi space, looking at maybe Chainlink or Uniswap, and then diversifying into AI. So, BitSensor, maybe Render, the Graph, diversifying via proof of work and proof of stake, looking at layer one like Atom, AVAX, looking at layer two like Arbitrum and maybe Polygon. So, you're not fully exposed to one segment, but you're also in some of the hot topics at the moment, like AI. Now, one strategy that we do see, which is fairly popular amongst our portfolio managers, is always having a small allocation to stable coins or to fiat currency. So, for example, you could have 90% allocated to different projects in the market and 10% remaining in stablecoin. And essentially, what that means is if the market decreases in value, your weighting of stablecoin is going to increase in value because the rest of your portfolio is decreased. So when you rebalance your portfolio, you're going to be allocating your stablecoin into these projects that have gone down in value. So you're essentially buying on the way down whilst maintaining a 10% allocation in stablecoin. So you're essentially dollar cost averaging on the way down. And vice versa, on the way up, your weighting in terms of crypto is going to grow and your weighting in terms of stablecoin is going to decrease. So you're then essentially trimming down a bit of your exposure and putting it back into stablecoin as well to reduce exposure during these extreme runs to the upside. So essentially what this strategy means is you always have capital on the side to deploy if the market does correct by 10, 15, 20 or 30%, which is highly likely in the cryptocurrency space.
So one area you didn't just mention there was memes, right?
Yeah.
Uh, you know, some people are getting insanely rich, and a lot of people are not. But what's your appetite as far as what do you say is the appetite as far as institutions and VCs regarding these memes?
I see, memes, they do what they say on, they do what they say on the tin, essentially. They're a bit of a joke. For me personally, and at ICONOMI, we don't really kind of get too heavy into the meme coins. So we have a strict asset listing policy. So we tend to only list the top 150 tokens or some of the new tokens with credentials come into the market, just to protect our investors. Not to say there's not opportunity to make money in the meme coin market. There definitely is, but I wouldn't say it's an investment strategy. It's a gamble, it's a punt, it's a bit of fun. So, if you have your core holdings in some of the main tokens and you're happy to play around with a few £1,000 or a few $1,000 that you don't mind losing, definitely that could be a bit of fun. It may make you a substantial amount of money, but long term investing into meme coins can be a very high risk sort of strategy.
Yeah, I'm just worried about the emotional side because we're talking about emotional investing, right? And if you invest in conservative, I say the blue chips are conservative,
Yeah.
you know, cryptos, and you're like, okay, you got a sound strategy, it's all based on fundamentals, and then you see some kid over here turn $2,000 into $200,000. Isn't it easy to get emotionally wrapped up and trade your what you got build up and dive into something and get punted?
Well, you look at these meme coins, those guys that make that kind of money, there's someone at the top who's lost that kind of money because they bought in at the very top as well. So it is, the earlier you get into those meme coins, obviously the higher probability of you making a gain. But the ones getting in late to the party obviously are holding a losing bag at the top. So it's a very tough. I personally don't get too involved in the meme coin market, but I understand there's a lot of gains potentially to be made there as well.
Got it. Got it. So that brings me into my next question then is digital asset health check. You know, how, how do we each conduct our own digital asset health check? And what are your criteria for selecting those digital assets for a good health check report?
Yeah, I think I touched on a couple of the different platforms that we use to kind of do a bit of a health check, but I think there's so many different tools you can use to check the underlying value of a potential token. I guess I want to kind of look at more of the broader view of the market. So for me myself, when I'm analyzing my portfolio, the first thing I do is actually take a look at the macro view of the global economy, because generally Bitcoin is the leader. If Bitcoin wins, the overall market wins, generally speaking. If Bitcoin goes down, generally the overall market goes down. So understanding what central banks are doing in terms of monetary policy. Are they are they reducing liquidity from the system, or are they increasing liquidity? Are they raising interest rates or decreasing interest rates? That in particular will give you a direction of how Bitcoin is going to perform. Now, unfortunately, we're not on a system where I can show you a few charts. Maybe we can do that next time, but there's a very strong chart showing the price of Bitcoin plotted against the global M2 growth rate. So essentially what this looks at is it looks at liquidity provided by the Federal Reserve, the Bank of Japan, the Bank of China, the Bank of England, and the ECB. And when these central banks globally are increasing liquidity, Bitcoin performs extremely well. And when they're reducing liquidity and removing money from the system, Bitcoin tends to go into a bear market. And the last three bear markets have coincided with a tightening cycle of these central banks. Okay. So, what essentially Bitcoin is there for, Bitcoin is a hedge against fiat currency devaluation, which over time takes place. So, understanding from my point of view, yes, you can, analyze all of these different tokens and go through a digital asset health check. The number one thing for myself is to understand what central banks are potentially going to be doing over the next 1 to 2 years. And I guess, if we look at the market over the past week, we can see the US inflation numbers have actually increased. This is now putting downside pressure on equities and cryptocurrencies. So there's now questions around whether the Federal Reserve this year are going to reduce interest rates like they anticipated, because inflation is actually coming back and rebounding a bit now. So the market is wobbling. We're getting interest rates are running a bit higher, and that's putting some downside pressure on the cryptocurrency market. So my kind of analysis, I'm generally looking at the macro side of things before going down into the underlying assets and stock picking essentially in the crypto market.
That's smart. That's smart. So I'm looking at let's look at macro for a little bit.
Yeah,
You
sure.
know, there are countries, there are going to be, I think, 30 major elections coming up this fall, right?
Yeah.
In the world, including the US. There's going to be these banks are looking at central bank digital currencies and each have their own look and spin on them. So it's kind of like, what's the trend there? What's the trend with the upcoming political cycle? How's that going to have an impact on the crypto market? What do you see?
Yeah, that's a difficult one to ask. In the US in particular, I believe they've agreed not to create a central bank digital currency. But yes, you're right. Coming up to obviously the election cycle, the Federal Reserve or the central banks are meant to be neutral in terms of the party they're supporting. However, at the moment, the Federal Reserve has been suggesting over the past 6 months that, or I guess 2 or 3 months, that we're potentially at the top, at the top end of the rate hiking cycle, and interest rates should be coming lower. But the market simply doesn't believe them at the moment. We actually have yields running higher. The bond market is dropping this week. Stocks, especially tech stocks, have had a pullback, and cryptocurrencies are having a pullback as well. So we actually are seeing the market kind of diverging from what the Federal Reserve has been saying. So we're now at a position where the market is probably going to push back their forecast of reduced interest rates towards the middle or back end of this year. We may stay at this kind of level for a longer period than what the market initially anticipated. In terms of central bank digital currencies, obviously, we have the rise of the BRICS nations at the moment, and that's probably the main trading bloc, which is causing some friction with the US. Now, the BRICS nations have actually been selling and de-dollarizing over the past, 5 years or so, and they've actually been stockpiling gold. So there's a lot of talk that they may create a gold-backed digital currency. Whether or not that's true, the main point I'm getting across is these kind of nations now, which are actually growing, they're essentially going through a phase of de-dollarization. And that de-dollarization will put selling pressure on the dollar. And that actually is good for Bitcoin and digital assets, because Bitcoin tends to move with an inverse correlation to the DXY, which is the US dollar index. So The US dollar, the de-dollarization theme, I'm expecting this to pick up momentum. Long term, I think that's great for Bitcoin, but obviously for anyone that doesn't have any exposure to Bitcoin, not so good for the local currency and fiat currencies as a whole.
Got to keep an eye on that. So
Yeah.
I'm going
Yeah,
to now.
it's a tough one. Fiat currency devaluation has been going on for obviously decades and decades. It's nothing new, but now there's an asset that can potentially protect us from that fiat currency devaluation. So
Sounds good. So um, moving into some of the pitfalls about crypto, right? There have been hacks, there have been rugs, there have been money grabs, there've been all kinds of stuff in addition to really great, utility, tokens and cryptos. So what do you see as some of the pitfalls of some of these scam prone cryptos and illiquid investments?
yeah, when you're looking at these types of investments, like I mentioned, ICONOMI, the way we actually protect our investors is we have a pretty strict asset listing policy. So I can't go into the details too much, but the cryptocurrency token must be listed on multiple major exchanges. So looking at Binance, KuCoin, Coinbase, for example. And before we actually consider listing this token, it must have a minimum market cap or a stable market cap. And it also must have a minimum threshold of a 24-hour trading volume. So essentially, what you're doing is you're vetting these tokens to make sure number one, the market cap is stable. Number two, it's listed on multiple exchanges so that I can potentially sell my token if it gets delisted from one exchange. Number three, it has a minimum 24-hour volume so that I don't get stuck in this token if liquidity does dry up. And I think if you, as an investor, stick to those three kind of principles and watch those as well, that will prevent you going into a lot of these scam tokens because, if you go onto the chart, you see 1,000% X and you're like, yes, I want some of that. But then, liquidity dries up and it's a pump and dump scheme. It's only listed on one exchange. And again, you're stuck holding that losing bag. So try and protect yourself a bit, put in some risk measures for yourself. And that should help you prevent, or that should prevent you going into a lot of these kind of scam tokens and pump and dump schemes as well. But again, that's touching on the meme kind of coin market craze at the moment, which is obviously huge. And yeah, we don't have too much involvement in that particular area.
What are some of the protective measures that you do? I'll tell you one of mine. When I buy a crypto, I put everything in the vault, and the vault has a 48-hour lockup. So if I want to emotionally take my money out, I can't. And then usually what happens is the next morning, I'm like, what was I thinking? You know, that I can't access that. Is there any like protective measures you offer your clients or that you do yourself that help you with the trading and investing?
Yeah, we try to get our investors to automate their investing as much as possible. So they're not emotional about it. So whether they're setting up reoccurring investment plans into their portfolios, whether that's setting up partial stop losses at certain price points and setting up partial take profits at certain price points as well. So if our investor sets up their account correctly, they very rarely need to monitor their portfolio because it's almost automated because they have the portfolio manager managing the investments and then they have their automated tools either reducing their exposure or increasing their exposure at certain price points. So, when they do see a big spike, they haven't necessarily got to do anything because the system is hopefully taking care of itself.
Yeah, that makes sense to me.
The
You know,
vault is a good idea though. I like that. So yeah, maybe we should take a look at the vault as well.
yeah. I I had a forced vault on me. I was a Celsius customer.
Okay. Okay.
That was 600 days of something I don't want to experience again. So
Yeah, wow.
assuring your clients that you are a exchange and not a hedge fund, right?
Yeah.
Is something that's important, I think.
I'll actually just touch on that because it's a very important topic that you just kind of come across, which is exchange risk. So, economy, we are classed as an exchange, but the way we actually work, We actually minimize third-party exchange risk because we actually spread investments across 15 different exchanges. So what that means is no one client is exposed to only one exchange. They're diversified across multiple exchanges. And then we always keep a portion of our assets in cold storage. So if we look at that 120 million pounds that's under management on our platform at the moment, we have a large portion in cold storage for security, and then we also diversify across 15 different exchanges. So, as a retail investor, what can you do? You can get yourself a cold storage device, you can get yourself multiple wallets, and never hold your core holdings just on one particular exchange. Try and diversify across, maybe two, three, four exchanges, as well as your cold storage device as well.
That's excellent. Thank you. So let's shift back into Bitcoin a bit, right? This past year, in January, we saw BlackRock show up, although they've been on the sidelines for a long time, waiting and with these ETFs. And then you have more companies like MicroStrategy, whose balance sheet is all Bitcoin, right? We have companies incorporating Bitcoin into the corporate treasuries, right? What are all these moves telling us about the future of Bitcoin?
Well, the ETFs in particular are really democratizing investing in Bitcoin at the institutional level. I'll just touch on corporate treasuries because at ICONOMI, part of my role is working directly with business owners in Europe and the UK who are looking to hold Bitcoin on their balance sheet. And I'll definitely say over the past 6 months, this particular area of the market, the demand is growing dramatically. I'm seeing more and more business owners reach out to me to explore holding, maybe 2, 3, 4, 5% of their balance sheet in Bitcoin. So they want to diversify away from fiat currency. And in the UK in particular, over the past 10 or 11 years, I believe the inflation has been over 30 odd percent in that time frame. So the pound's purchasing power has decreased dramatically in just a 10-year period. And that's going to continue because it always has done. I think I saw a chart the other day. It was the US dollar had lost 96 or 98% of its purchasing power since World War II. And that theme is going to continue because nothing's changing at the monetary level in terms of the central bank policy. They're continuing to print money out of thin air. So when we go back to a business owner whose margins are being squeezed, what can they do to protect their business? Well, they can possibly hold a portion of their balance sheet in Bitcoin, which may provide some upside potential if their fiat currency devalues. If the fiat currency strengthens, great, they've got 95% of their balance sheet in fiat currency. But if it devalues, they have Bitcoin there helping to offset that decrease in their purchasing power. So this is, for us, it's a big area we're looking to focus on in the UK and Europe. We're seeing more business owners kind of exploring this opportunity. And I think it's just the start. I think more and more companies are going to want to explore holding Bitcoin and other digital assets on their balance sheet over the next 1 to 2 years. So I think this is just the start of a new trend.
And that's start with a new trend. And because of that new trend, what do you see as happening, 5, 10 years down the road because of it? Do you see the reversal of the fiat devaluation, or do you see a new paradigm? And if so, what is that?
I see a continuation as is. I don't see any major changes at, the macro level. I think fiat currencies are going to continue, but I continue to see them devaluing over the next 5 years. 5 to 10 years, I'm expecting to see a continuation of a de-dollarization across nations outside of the West in particular. We may go into a bit of a more divided world between the BRICS nations and the West. That is obviously a scary narrative to think about. But I think in terms of Bitcoin, we've already seen more than 10 to 15 billion flow into these ETFs in the first 2 months of trading. I'm expecting that over the next 5 years to definitely reach more than 100 billion next 2 years. Sorry, over 100 billion, which would be huge for the Bitcoin market. So these ETFs, they're good, but then they also pose a lot of downside risk because if the ETFs start dumping their holdings, we're all now kind of in the hands of the ETF issuers who are selling Bitcoin or buying Bitcoin. there's a very strong correlation between the price of Bitcoin and the daily growth rate of these ETFs. If they increase their holdings, Bitcoin tends to rise in value. If they decrease their holdings, it will decrease in value. So these ETFs are great, but also they can potentially pose some risks on the downside if they do start to sell their assets as well.
And I know the Bitcoin ETFs have been here. There's something else coming up soon that people are speculating about. Ethereum ETFs and other potential ETFs like a Solana or a Litecoin ETF. What do you see would be the possible benefits of that, or downside of that?
So, we're seeing Ethereum catch up to the rest of the market early 2024 because it had a pretty average return in 23. And, we're seeing a bit more upside now. And that's because of speculation about the ETF. So if the ETFs do go live for Ethereum, I think that's going to open the floodgates to multiple ETFs across the cryptocurrency market. If it gets pushed back or delayed, I'm expecting it to be pushed back and delayed until the very last deadline is due. Um, if that continues, we may see some kind of nervousness, but I still expect Ethereum and the rest of the market to thrive, this bull market. Um, I don't think it's dependent on the ETFs. I don't think it's kind of like a do or die. Will they go into a bull market if the ETFs don't get approved? I think they will do as long as Bitcoin thrives and the market conditions are good. But if the ETFs do come to the market, I think it's going to be exponential growth from here. I think it'll be a very exciting time for the cryptocurrency market.
I'm looking forward to the exciting time. um,
Likewise.
awesome.
It's been pretty lackluster in the altcoin market. It's been very Bitcoin's dominated. There's been a few green shoots across the altcoin market, but I think everyone's kind of waiting for that liquidity to start flowing down to the rest of the tokens later on in the cycle. So
I saw a metric and it was crazy, but I understand it. What did I see? I see sentiment where we are in a bull market. We're starting in a bull market, but the sentiment is at an all-time low. And lower than it was during bear markets, a couple bear markets, right? And the reason, and that's why I asked you about the meme coins, is you see a very small subset of the market doing well, and everybody else is lackluster, right?
yeah.
So that's why I think it's important that people not give up hope, right?
Yeah, this cycle has also been very different to previous cycles. It's the first time we're at record highs before a halving event in a couple of weeks. So, I think people are probably expecting some downside now because of where we are in the cycle already. So maybe I think a lot of people are on the sidelines waiting for this pullback and waiting for this pullback. If they didn't allocate when Bitcoin was at 17,000 or at 20,000, at 30,000 or 40,000, we're now at 70,000. When are they going to get into the market? So I think probably a lot of liquidity is on the sidelines waiting for a substantial pullback as well.
I forgot that halving is in 2 weeks.
Yeah, exactly.
So what are you telling people? What's your words of wisdom of where we're headed the rest of the year because of this halving?
Okay, so rather than giving an opinion, I'd rather just give some facts based on previous bull and bear market data. So, the average bull market peak occurs 1.5 years after a halving event. So, if we use that metric, it would suggest that mid to end 25 could potentially be the next bull market peak. Um, the last three bull market peaks have all occurred in the last quarter of the year. So between October, November, December, after a halving event as well. So, I think we're early in this cycle. We could have a 10, 20, 30% correction, but I'm still allocating into this space based on the fact that Bitcoin doesn't tend to peak until 1.5 years after a halving event. So for me, we are, at 70,000 at the moment. There could be pullbacks, but I've been allocating over the past year, and I'll continue to do so every month until we get kind of early 25, and then I'll start to maybe reduce some exposure and see where the market lays.
That's a good fact. A year and a half. So when people say when they're going to get in, they should get in now for the next 1.5 years.
But yeah,
Yeah.
if you haven't got in now, when can you buy in? The only effective strategy is to buy every week or buy every month. Buy a small amount every week or every month. So if the market goes down, great, you're buying some more. If it goes up, you're still allocating as well. So remove the emotions and try and have like an automated investment strategy going forward.
Awesome. I like it. Thank you very much. I want to thank you very much for your time today. This has been an amazing conversation. I have one last question. It's really easy. How can people find out more information about you, about Economy? How can they become clients, users of your platform? How can they do that?
Yeah, no, thanks for having me, Jamil. So if you go to ICONOMI, number one, you can search for Anthony Fernandez at ICONOMI. So ICONOMI is ICONOMI. We run a free monthly newsletter on our LinkedIn page, going through some tokenomics, technical analysis, fundamental analysis. So yeah, feel free to subscribe there. You can reach out to me on LinkedIn, and you can go to iconomy.com to get some more information on the portfolios as well.
Awesome. Thank you very much for your time today.
Thanks for having me. Hopefully we can do this again at some point in the future, Jamil.